America is drowning in $37 trillion of debt. That's a 3 with 13 zeros after it. And this week, it just got worse. You know that friend who keeps maxing out credit cards, then getting new ones? That's basically the United States right now. Except instead of owing thousands, we're talking trillions. And the rest of the world is starting to notice. Here's what just happened. President Trump signed what he calls the Big Beautiful Budget Bill. Sounds nice, right? Well, it's about to add another $3 trillion to our debt pile. Even Elon Musk called it a disgusting abomination. When the richest guy in the world is worried about government spending, maybe we should pay attention. So why should you care about some big number in Washington? Because this affects your money, your future, and whether the dollar in your pocket stays valuable. Let me break down what's really going on and why some very smart people are getting nervous. First, let's understand the insane scale we're dealing with. $37 trillion. If you saved $1 million every single day, it would take you 100,000 years to save that much. The entire U.S. economy only produces about $25 trillion a year, so we owe more than we make in a whole year. Foreign countries own about $8.7 trillion of our debt. Japan holds the most at over $1 trillion. China has about $768 billion. The UK has $765 billion. These countries are basically our credit card companies. And here's where it gets interesting. The dollar has been falling. Since the beginning of this year, it's down 10% against the British pound and 15% against the euro. That's not normal. Usually when the U.S. has higher interest rates than Europe, the dollar gets stronger, but the opposite is happening. Investors are also demanding higher interest rates to lend America money for longer periods. They're basically saying, we don't trust you as much anymore. It's like when your credit score drops and suddenly everyone wants higher interest to loan you money. Ray Dalio runs the world's biggest hedge fund. He's not some random guy with opinions. This is someone who manages hundreds of billions of dollars. And he says America is at a crossroads. On our current path, he estimates we'll soon be paying $10 trillion a year just in loan payments and interest. Not for roads or schools or defense, just interest. Dalio warns that if we don't deal with this now, the debts will build up to levels where they can't be managed without great trauma. So what does great trauma look like? Option 1 is brutal. Massive spending cuts or huge tax increases, or both. Dalio suggests cutting our deficit in half could prevent disaster. But Trump's new bill actually cuts taxes more than it cuts spending. We're going the wrong direction. Option 2 is what we did in 2008. The Federal Reserve prints money and uses it to buy government debt. But that creates inflation. Your groceries get more expensive. Your rent goes up. And if you own a house or stocks, you get richer while everyone else gets poorer. Option 3 is the nuclear option. America just stops paying. Can't pay, won't pay. Default. If that happens, the entire global financial system collapses. The 2008 crisis would look like a picnic in comparison. Now, before you panic and stuff cash under your mattress, here's the weird part. None of this is likely to happen soon. Why? Because the world has nowhere else to go. Mohamed El-Erian used to manage one of the world's biggest bond funds. He told the BBC that everyone knows the dollar is overweight in global portfolios. Countries are trying to reduce their dollar holdings. They're buying more gold, euros, and pounds. But there's a problem. You can't move trillions of dollars overnight. There's simply no other currency big enough. He calls the dollar the cleanest dirty shirt. All the options stink, but the dollar stinks the least, so you keep wearing it. Even the governor of the Bank of England admits this is on everyone's mind. He says Trump's Treasury Secretary is very aware of these issues. They know the dollar isn't fundamentally threatened right now, but they also know this can't go on forever. Here's what really worries the experts, something called fiscal dominance. It's when the Federal Reserve can't do its job of controlling inflation because it has to worry about government debt instead. Imagine if the Fed wants to raise interest rates to fight inflation, but can't because it would make government debt payments explode. That's fiscal dominance, and we're getting dangerously close. In May 2025, Moody's became the last major rating agency to downgrade America's credit rating. We no longer have a perfect score from anyone. They specifically cited persistent deficits, rising debt burdens, and political gridlock. Translation: we spend too much, we owe too much, and nobody in Washington can agree on fixing it. Now, you might wonder, what about Japan? They have debt at 250% of their economy and haven't collapsed. True, but Japan has also had basically no economic growth for decades. Low growth, deflation, economic stagnation. Is avoiding crisis while accepting permanent economic weakness really winning? America does have some advantages. About 76% of our debt is owned by Americans. That's way better than emerging markets, where foreigners own most of the debt and can pull their money out fast. Also, we borrow in dollars, which we can print. Argentina can't print dollars when they need to pay debts. We can. But here's the uncomfortable truth. The Congressional Budget Office projects our debt will hit 118% of our economy by 2035. By 2055, 156%. Annual deficits are growing from $1.9 trillion now to $2.7 trillion in a decade. This isn't sustainable. Everyone knows it. The question is whether politicians will fix it before markets force them to. History suggests early action is way less painful than waiting for a crisis, but early action requires political courage, and that seems to be in short supply. So, what does this mean for you? First, the dollar probably won't collapse tomorrow, but its long-term value is genuinely at risk. Second, inflation might become a permanent feature as governments print money to manage debts. Third, interest rates might stay higher than we're used to as investors demand more return for the risk. The death of the dollar has been predicted many times. There's actually a book from 1968 warning about it. The author is long gone. The dollar is still here. But that doesn't mean its status is guaranteed forever. What do you think? Are we heading for disaster, or will we figure it out like we always do? The $37 trillion question isn't whether we should be worried. It's whether we'll act while we still have choices, or wait until the choices are made for us. Based on current politics, I wouldn't hold my breath for Washington to suddenly become responsible. But then again, sometimes it takes staring into the abyss to finally change course. Either way, understanding what's happening with our debt helps you make better decisions with your own money. Because when the world's biggest economy starts playing dangerous games with debt, everyone feels the consequences. Like and subscribe if you enjoyed the video.